Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Simon Evercook of Premier Asset Management. Hello, Simon.
Morning.
So what's your first pick today?
The first pick is in a market that we quite like. It's GLG Japan Core Alpha. The reason we like this fund is because it's been under the cosh for years now, and we quite like funds that have done that, with the proviso that it's run by an excellent manager, and Steve Harker is an excellent manager with an almost unsurpassed long-term record. So if you get the opportunity to buy a manager like that, when they've had a bad run and the manager themselves is talking about almost record stretches of valuation, his deeper value stocks versus the more defensive, higher quality stocks, then that's typically a great time to be getting in. And sure enough, he's had a great 6 months, but I think that is the foothill, if you like, of what potentially could be a very long run. And we've got plenty of value within our portfolios, but I sort of get the sense that some people have been caught not having enough value around the last 6 months or so when you've seen that reflation trade come through. And if you do hold Japanese equities, this is the one to look for because it gives you that value trade, and it's got a lot to play for. There's lots of value in that portfolio.
A number of Japanese fund managers or fund managers who invest in Japanese equities have made a lot of money hedging the currency. Is that something that he does, or is it very much stock picking?
He's a stock picker, but they have got currency hedge share classes available, so that's on our shoulders, and we have done that in the past, and we've done actually reasonably well out of that. Basically, following value principles. When the currency looks expensive, then we'll hedge it out, and when it looks cheap, then we won't. At the moment, we have some Japanese exposure hedged back to either dollars or sterling.
And what's your second stock pick or fund pick?
Second stock pick is a slightly obscure one. It's off the beaten track. It's HMG Global Emerging Markets. Again, this follows a value approach, so it's quite useful if we are in a reflationary world. And it has a slight niche that it operates in. It is a fund that buys the subsidiaries that are listed in emerging markets of developed market companies. So you get good standards of corporate governance, which is very important in emerging markets, but you also get the advantage of the parent company passing on knowledge and information and capital to that subsidiary. Now, the advantage of this is you're getting emerging market valuations currently and potentially emerging market growth rates, but you are getting that extra level of growth and of expertise in there. Now, when you look at the track record of this fund, it's going to be a brave person that buys it because it started about 2 years ago. The fund manager bought a lot of cheap stocks with no momentum, which meant that the momentum carried on. They carried on getting cheaper. So the track record does not look appealing at all. But from where we are currently, it's a portfolio full of attractively valued stocks. The portfolio yields over 4%, so it's a nice income play too. And we think there's an awful lot to play for in this portfolio, particularly if we are going into that reflationary world.
Now, to me, that sounds like the best of both worlds. You've got, developed market corporate governance and emerging market growth. So why were these stocks so downbeat? I mean, why are people not realising, or the market not realising their value?
Because they're tarred with the same brush as emerging markets, and everyone's hated emerging markets for the last 3, 4, 5 years now. So they've been marked down accordingly because of that. But they're so sound, these companies, because they've got the backing of the parent company, that you are, in a certain extent, taking away some of that risk. And among emerging market funds, it's one of the least volatile over the period it's been running. So that it sort of shows that soundness of those companies.
And what's the third investment pick?
Third investment pick is Rebecca Sam Smart Materials. Now, this is more of a niche fund. We bought it about 2-3 years ago now. For us, what we liked is we like the fund manager. First of all, we've got to think that the fund manager is a good fund manager in his own right, regardless of the theme or the area that he's operating in, and we do believe that. But secondly, we like the fact that it was a commodity play at a time when everyone hated commodities. So we were interested in going into commodities. We hadn't held any all the way through the top of the commodity bull market and all the way through the bust. But by the time it was becoming reviled, we were starting to become interested again. But this was interesting because a lot of the stocks that they hold, so for example, they might be carbon fibre companies, are all trying to replace classical commodities. There's intellectual property in a lot of these businesses, but because they're substitutes, their prices were marked down as commodities were selling off, which meant that actually you get a chance to buy some really interesting companies which have got moats, as it were, which commodity companies typically don't have, at a point in their cycle when they're down on the luck. So you're buying companies that were growing very much more quickly than global equities for a slight discount to global equities. Now, that to us was just singing out very loudly, and so we bought in, and we're quite happy to keep holding that on the basis it's a good fund manager. And over the next 10, 20 years, we think that theme of making aeroplanes more fuel efficient, or cars more fuel efficient, or generally reducing the weight and the reliance on typical commodities is one that's just going to keep running and running. So you've got that nice tailwind behind it as well. So it's another best of both worlds sort of fund for us, and it's done us a great job over the last couple of years.
Simon, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.